U.S. beef export crisis, tariffs drive dramatic export collapse in 2025. The U.S. beef industry is grappling with an unprecedented export crisis in 2025, as the Trump administration's tariffs have triggered a dramatic decline in shipments to key international markets. Tariffs imposed on major trading partners, combined with a record low cattle inventory and structural challenges in the industry, have created a perfect storm that is severely impacting U.S. beef exports. Major export declines hit multiple markets. China, the world's largest pork consumer, has essentially closed its doors to U.S. beef. Weekly shipments to China plummeted from 2,000 tons in 2024 to just 54 tons by late March 2025, a near 97% collapse. This represents a massive loss for the industry, with the U.S. Meat Export Federation estimating the lost opportunity at $150 to $165 per head of fed slaughter, or about $4 billion annually. Further exacerbating the crisis, U.S. beef exports in June 2025 hit their lowest volume in 5 years at 93,928 metric tons, down 15% from the previous year. Export value fell 18% to $769 million, marking the lowest value in 17 months. For the first half of 2025, beef exports were 6.5% below the previous year's pace at 602,221 metric tons, while value declined 6% to $4.92 billion. Brazilian beef tariffs create additional pressure. The Trump administration's 50% tariff on Brazilian beef, effective August 6, 2025, has eliminated a crucial import source for U.S. meat processors. Brazilian beef is now considered unviable as a supply source, with a total tariff rate of 76.4%. This creates a squeeze where U.S. exports are declining, while import alternatives become prohibitively expensive. Brazil had become a significant supplier, with exports to the U.S. growing 65% in volume and 59% in value in 2024 compared to 2023. However, following the April 2025 10% tariff, Brazilian shipments to the U.S. already dropped 62% from 48,000 tons in April to 18,000 tons by June. Structural industry challenges compound export problems. Record low cattle inventory. The U.S. cattle herd has contracted to 86.7 million head as of January 1, 2025, the lowest since 1951. This marks the 6th consecutive year of contraction, severely limiting the industry's ability to meet both domestic and export demand. Production declining. Commercial beef production is forecast to decline nearly 2% in 2025 to 26.6 billion pounds. The 2025 outlook shows beef production dropping to 25.12 billion pounds, a 6% decline from 2024. Export dependence. Beef exports are expected to fall another 7% in 2025 due to tighter domestic supplies. As a percentage of production, exports would represent about 10% in 2025, down from the 2019 to 2023 average of around 12%. Retaliatory trade measures escalate. Widespread tariff implementation. Trump's reciprocal tariffs, announced in April 2025, imposed varying rates on major trading partners. China, 34% on top of existing measures. European Union, 20%. Japan, 24%. South Korea, 25%. Vietnam, 46%. Trade war escalation. By April 2025, U.S. tariffs on Chinese goods had risen to 145%, while Chinese tariffs on U.S. goods reached 125%. Although these were reduced in May to 30% and 10% respectively for 90 days, the damage to established trade relationships was significant. Industry response and market adaptation. Canada gains market share. While U.S. exports decline, Canada has been capitalizing on the situation. Canadian meat exports to Japan surged 13.1% by May 2025, worth over $518 million. Canada secured $5 billion in new deals and is building cold storage and shipping infrastructure to serve markets previously supplied by the US. Australia reopens to US beef. In a positive development, Australia relaxed its biosecurity rules for US beef in July 2025, ending a 20-year ban. However, economists doubt this will significantly boost US exports due to Australia's position as a major beef producer with much lower prices. Price and supply chain impacts rising domestic prices. Fed steer prices are forecast to average $201 per hundredweight in 2025, up from $187.12 in 2024. Beef prices have hit record highs, creating affordability challenges for domestic consumers. Import dependence increases. To offset reduced domestic production, beef imports are forecast to rise 3% to £4.77 billion in 2025. However, tariffs on key suppliers like Brazil make these imports more expensive. Looking forward, the US beef industry faces a challenging period with export markets disrupted by trade conflicts, while domestic production remains constrained by the smallest cattle herd in decades. The industry estimates it could lose $4 billion annually from reduced access to China alone. Recovery will likely require both resolution of trade disputes and time for the cattle herd to rebuild, which industry experts suggest is unlikely until 2026 or beyond. The crisis highlights the vulnerability of agricultural exports to trade policy decisions and the difficulty of quickly replacing established international market relationships once they are disrupted by tariff wars. As the US beef industry navigates these turbulent waters, it is essential to understand the complex interplay of trade, production, and consumption dynamics at play. By recognizing the scale and depth of this crisis, industry stakeholders can better position themselves for a successful recovery and adapt to the evolving global trade landscape. Quote, "The US beef industry has been dealt a devastating blow by the trade wars, with the potential to cost US farmers and ranchers over $4 billion annually in lost exports alone. The industry's dependence on export markets and the lack of domestic herd growth leave it exposed to the consequences of trade disputes." Chad Russell, US Meat Export Federation.